Welcome back everyone to Organically Successful. You know what it is market recap, day market chart markup analysis, whatever you want to call it. Last week we just take a quick look at last week price. We did suffer our first loss in 2 weeks. It was heavy, I would say. We It was 450, and as soon as we lost here, we ended for the week. Um, I actually sold at the third standard deviation when the play was the fourth, and I sold on EU and GL too early, and I missed the divergence that we saw where we had a news driver for pound that sent prices down, and then it break up. So in a market where we was already expecting higher prices, when we saw when the price went down at a discount, there's a high probability buy because it went 4 standard deviations down with the news driver that we had that particular day, and then it break to the upside. And we had FOMC, and I don't really gauge and predict FOMC, but it was a high probability to sell because again we're expecting lower prices after this run up. But I sold at the third with EU, and when I sell on EU, I typically sell on GU as well. And because I sold too early on EU on the third SD, but price went to the fourth SD, that's where we suffered the two losses, and that brought the end to my trading. Even though I knew FOMC would have sent prices down for the evening session, I also had a high probability sell at 2:30. But again, I lost. I didn't enter. I stick to my rules, stuck to my rules, and subsequently, that's how we ended the week. Again, we were expecting lower prices, so our analysis and everything was still on point. But again, sometimes you will be profitable, but you still understand price. So it's still a good takeaway. It's always good to know where you went wrong. It's always good to know how you trade. If you could have a better entry. I'm not saying you could get the perfect entry, but it's always good to improve on your wins and also understand your losses. You know. But this week, again, typical, we ending off the week where we clear the charts and do up for next week draw. The only mark we leave on is the opening price of the previous week. I stated in the last video that I'm going to sort of keep the opening price for the week there, so we can know we're in a high premium. Don't worry, I didn't forget you all the video about why I particularly find it important to highlight these areas. That video will drop, but I don't want to make this video too long, and I don't want to make more videos again any longer than they already are. So I already cleared up the charts, and I will show you all the draw for euro that we and I am looking for. Again, our weekly dollar index play on the upside still in play, even though we got some rejection going into the daily volume imbalance that we had highlighted. We traded a little bit into the fair value gap. Sorry, on the monthly imbalance, we get some resistance there. But above that, we have a big imbalance that we believe that the draw would be coming out to the end of the year too. So we'll see if the year will end where we take these areas here and see what if we're going for a push on the upside or what. But when we get there, we'll discuss that. But again, we see some heavy resistance coming in. But to me, the draw still on the upside. Just clear up these a bit more for you all. Have a cleaner chart. And oh, my bad. I'll just annotate some levels underneath. Are we noticing my channel? Right. So we'll just highlight some levels underneath, some inefficiencies underneath price, that if we see some resistance coming in on the dollar index, we could see if there's an area where price would wanna bounce at. So we have a inefficiency underneath Tuesday's price action on the index. So I'll just highlight this little gap here. See, we void of sell side delivery. So I just highlight this here. So this could be a draw where price could want to come back to, and we'll see how it react here. Buy side and balance, sell side. Buy side and balance, sell side efficient. Another thing I'm gonna start to do too is we don't buy or we don't sell the dollar index, right? But we gauge the dollar index for strength. So what I mean is that whenever we're looking to enter on euro or GU, because when you sell GU, you're effectively buying US dollar. That's why it's by the US dollar, obviously. And when you sell US, that's how it's, but when you buy the foreign, that's how you sell the US, right? And when you sell the foreign, that's how you buy the US, right? So, right, every time right before I enter a trade, when price are coming close to the deviation I expect, I'm gonna be looking on the dollar index chart, and I would enter my trade when I see, okay, a draw on the index. Okay, index look like coming down and take these lows. When I see that take that, then I look, boom, sell here, because I'm expecting this to shoot up, so I'm expecting this to shoot down. You know, so we have a daily BC there, and we have a no, we have a wick, long wick here. So I would just make this brief, right? So over to euro, and I'm using euro as the currency pair to do the charts and on, because Monday we have some news for euro, right? As the first news ever. We have, actually, do we have any news for GU this week? Right? So we're looking at euro this week. So just get into it real quick. So our weekly draw still in effect. We looking at the weekly, this relative equal lows at the bottom here, and we already trade through our low hanging fruit on the weekly chart. So we're on the daily now. All right, so on the daily, we traded through this daily swing low of May, and we still on the downside. So the first low hanging fruit would be this swing low that I highlighted here already on the daily chart. So if we drop to the 4-hour chart, we have relative equal lows and a swing low here. So that could be a possible draw, but on the upside, we have equal highs here. 2 swing highs in the middle here and here, and also relative equal highs. We have a breaker here. So, and we also have a tiny daily fair value gap in here. Clean off this, and I'll clean off this here as well, for the sake of keeping our chart as clean as we can. Cleaner chart is the best. The best chart I have is a clean one, and a chart that just have the areas that you anticipating to price the trade up into. All them other lines and stuff, it is really distract you. It can really throw you off if you have if you have too much of a markup chart. I just put DFVG, daily fair value gap. Right, and I would just highlight the first. We are relative equal, but this one is the most recent one. Wait, I just eat breakfast and my stomach is not having it. And buy sell equator on the daily. So high weekly. The weekly one. Oh, that went up real high. Right, so we have a right, boom. There's not much. Again, we kind of custom used to how we mark our charts, so it's not anything really that new and different. And I mean, to be quite honest, it's not that much. it is definitely not that much that we highlight and whatnot. So we just look at the first objective. I don't want too much things on my chart. So when the market open, I drop to 1 15. When the market open, I really and truly just expecting, because I'm expecting this week to trade up and to fill this imbalance here and then continue on the downside. But if we get opportunities to buy, we could be a buyer, because if you notice, we gain some good rejection of these levels, the daily volume imbalance and the monthly volume imbalance. I expect it to get traded through still, but we will have opportunities to, to get some moves in on a buy. And we're coming on to the ending of the year. I mean, we still have some time, but we're in October. So we had to just look at our seasonal tendency to see how October typically move for foreign, so we can anticipate when buying coming in. It's expected, but we're still expecting higher prices for dollar, so we could still have our bias in check. We're so close to the draw, so we'll see. I just find it pretty funny, like, the dollar on the news, they say the dollar dying and all kind of thing, but yet the dollar index is doing so well. It's like, who buying a dying currency, right? I just find the whole that just be so interesting, But you see this clean, equal levels. We can anticipate that to be a draw. All right, so we have our fair value gap also here. Just highlight the inefficiencies where we could expect a draw up to, and then a sell off. We'll see Monday trade up into here. Right, this is the time zone we're looking for a short of Monday trade up into here. We're looking for a short in here around that time. Our FVG the draw on the downside where we could expect price to trade to. We're going to forward chart, and we're looking for higher time frame swing lows. So we have a swing low here that get traded through here, and then it went up for Friday. Had a new driver traded up, dropped to 50 minutes. Let's see if we see any swing lows. I don't really see any swing low, but we have equal levels. So I'll just highlight we'll just highlight some which for small time frame. See any inefficiency. So we have a big capping price underneath here. Alright, we have a capping price underneath here. So we'll see if Sunday and Monday, how Sunday open, and what Monday wanna do if it trade down into here. Alright, so that's pretty much it, really. We know we do it. It's pretty simple. What we look for every week, same thing. Keeping the new week opening price, so we can see how price react to certain premium levels. What I'll do is just put the date. So this was the 10th, and this was the 23rd. This one is the most recent one. New week opening, 23rd. So last week. This one is the 10th. Well, that's one out of play, so we don't really have to pay in that one. So I just keep that one in mind. And that's pretty much it. So if price trade down into the 5 minutes, we're looking to see how it react there. And our time of day, we have a new driver coming in. So if price trade down lower, we could after the new driver we could look to buy. We have to trade into our area of interest. And I didn't put the liquidity underneath here because it's just pretty much by where our daily target for the liquidity is. Literally like 8 pips. And if it trade down into here, more than likely it would just go down into that one time. So I don't want to put too much lines now. So, but if the new driver send it up, then we'll know that okay, we're already expecting lower prices, so we're looking for a signal just to go short at. We'll see if it trade up into our daily fair value gap. If the news want to send it up, and then we look for reasons to go short, but we can anticipate this whole imbalance area here to be traded up into for this upcoming week, and then we can look to, you know, go short. This was FOMC here, so that's pretty much it. So I'll catch you guys when the chat open. So enjoy your week, have fun, take notes, keep on studying. If you had a winning week, take your notes of your winning week. If you had a losing week, take your notes of your losing week. All right, so be safe.